Russia attacks Ukraine, oil is passing $100 a barrel, inflation is soaring, the Fed is about to raise interest rates. What should retirement savers do? This is a question I get asked every day. I am not a financial advisor and I cannot give you financial advice, but I do understand why everybody is asking. Let's get into it. With all the global and economic issues, nobody knows which domino will fall next. We weren't expecting a health crisis in 2020, and just when we thought we were getting back on track, Russia attacked Ukraine. Regardless of what happens next, here in America, inflation is hitting us hard. The Fed is behind the inflation curve. So what will happen when they start raising rates? How far will they go? Based on history, if they over-tighten by raising rates too high or too often, we'll likely be looking at another recession. As Connor Sen of Bloomberg says, a tightening of policy that takes markets by surprise could crush asset prices and run the risk of pushing the economy back into recession. Gold and silver don't usually react well to higher rates because higher interest rates typically means a stronger dollar. When the dollar is stronger, investors tend to gravitate towards interest-bearing accounts. With that logic, you might think that it would be better for gold and silver owners if the Fed kept rates low. However, in 2017, when the Fed started backtracking on interest rate hikes, gold and silver strengthened significantly. And also in 2019, Americans became worried that the economy was headed back into recession. Soon after, the Fed announced a move back to lower interest rates. Between their announcement and the end of the year, the price of gold and silver both improved by 16%. These events lead some analysts to be bullish on gold and silver no matter what the economy is doing. For example, one respected analyst, Peter Boockvar, said, "I'll use this as another opportunity to express my bullishness on gold and silver. From here, either the Fed will tighten too much and growth slows, that results in the Fed backtracking, and that will be bullish for gold. Or the Fed will still be too slow in tightening, and real rates will remain firmly negative, and that will be positive for gold." It's possible that this positive outlook toward gold and silver is because the world is waking up to the potential of precious metals to thrive no matter what is happening in the economy. Back to the question, what should retirement savers do? Every investor has to decide for themselves, but it helps to learn as much as possible. And that's why we continually suggest joining us for one of our economic web conferences.
Hey guys, Joe Montana here with my man Devlin Steele. He and his team at Augusta Precious Metals are constantly putting out new information to keep you ahead of the game. Click subscribe now and hit the notification bell to stay up to date. You'll be glad you did.